What the income tax returns are showing is that the number of Indians filing returns of 1 crore or upwards has doubled in the last 5 years, whereas the number of Indians filing returns of 5 lakhs or less is flat over 5 years. And that's when we realized roughly 200,000 families have absolutely killed it over the last decade or so.
You know, this one stat from that blog, it really blew my mind, because that's when you put a number to a trend that you're otherwise observing. Post-COVID, something's happened. What's happened?
So I reckon 3 different things have kicked in, Surabhi. I think first is the stock market itself. So if you look at the data, this is Nifty level data, right? So the overall stock market is up some 17 or 18x in 20 years. So more affluent families who loaded up on the stock market 20 years ago or even 5 years ago, their wealth has skyrocketed on the back of stock market compounding. The second is highway building, right? So in the last 12, 13 years, India's national highway network has tripled. Now, when you triple the highway network, that means any land through which the highway network goes through, the price of that land is basically rising 60 to 100%.
Well, I started my, life in New Delhi, and I've seen what happened to Gurgaon, so I'm well aware of, that wealth effect that just highway development and the land around it, what that can do.
And assume Gurgaon is now happening all over the nation, right? Because of the highway, right? And the third piece has been, as India's got joined up, not just highways, say airline connectivity up 5x in 10 years, broadband connectivity up 60, 70x, number of bank accounts have tripled in the last 10 years or so. As you've joined up the country, entrepreneurs, businesses in small town India have got linked into the broader economy.
How does one benefit? Are you saying there's a way of making money from those who've already made money?
That's right. H&W consumption, let's call it class consumption, is outselling the product which represents mass consumption, right? So take a simple example, Birkenstock chappals versus Relaxo ka chappal. So as a erstwhile sharer in a Relaxo, I was only too painfully aware that Birkenstock sales are doubling every year, right? And if you go to say towns like Indore or towns like Raipur, you can see the Birkenstock showroom. The stuff is flying off the shelf. And as a erstwhile Relaxo shareholder, I'm seeing that Relaxo's revenue growth or volume growth is say low double digits at best. Whether it is chappal, whether it is undergarments, whether it is motorbikes, whether it is jewellery, the purveyor of class products, expensive products, is doing way better than the purveyor of mass products. And that's the trend we are seeking to play. So how can you make money from that? Straightforward one would be Titan, right? So in almost all our portfolios, Titan gets representation. Within Titan, we are seeing that, say their Riva, Zoya, their premium products are doing really well. Carrot Lane, which is online purchases of jewellery, that's also doing well. One notch below Titan would be Royal Enfield, Eicher Motors, volume growth, revenue growth in the mid to high teens. If you wanted to play it through financial services, Kotak has a wealth management and asset management business which is booming on the back of the Octopus class booming.